Okay, let's dive right into this. Welcome to today's Explainer, where we're going to break down a pretty fascinating situation unfolding right now with American Well Corp. You probably know it by its ticker symbol AMWL. If you've been tracking their long-term numbers, you've definitely noticed something catching everyone's eye, a very fresh, very noticeable price jump. The stock is actively trying to push higher, and man, is it generating a lot of buzz. But, we don't just see a jump and blindly assume we're in a new trend. We've got to break it down. We need to figure out if this upward push has actual legs. Basically, we need a roadmap.
And that brings us to the core question of this whole explainer. Is this AMWL breakout actually real? I mean, are we looking at the start of a massive upward move? It absolutely could be. But as the analysis makes super clear, the potential for a huge move is only half the story. To really get a grip on what's ahead, we need to build an if-then strategic playbook. We have to map out exactly what conditions the stock needs to meet before we can even start dreaming about those massive upward climbs.
Section 1. Establishing the floor and looking at critical support levels. All right, before any of the big, exciting moves can happen, the stock absolutely has to hold its ground. Let's start with our very first vital number, 6.14. According to the data, this is the primary support level. Basically, for AMWL's current rally attempt to actually mean anything, the stock has to sustain itself above this specific line. Think of 6.14 like the foundation of a house, right? If the foundation cracks, whatever you're trying to build on top of it is going to be in serious trouble.
But we also need to talk about the worst-case scenario. We need a failsafe, and that number is 550. This is the absolute stop-loss. While 614 is our main structural support, 550 is literally the line in the sand. If the price drops below this point, the entire bullish theory completely breaks down. It's a level that demands immense caution.
Now, what's really interesting here is how these two numbers, 6.14 and 550, work together to define our risk. You have to make absolutely sure things don't dip below these levels. It is absolutely crucial, because if the stock can't sustain itself above that 550 to 614 zone, the data tells us it's likely heading back down. It completely resets the narrative. The whole upward playbook we're about to jump into hinges entirely on the stock staying safely above this critical safety net.
Section 2. The immediate targets, examining the next price levels.
Okay, so let's look at the actively moving numbers. Step 1, like we just talked about, is sustaining above 6.14. Because if it does that, boom, we unlock step 2. Our first big expectation is a climb up to 9.5. If the momentum is strong enough to carry it through that level, we move right along to step 3, with our next immediate target sitting at 13.13, or, let's just round it to 13.2. This step-by-step ladder is the immediate active zone for the stock's recovery.
But hold on, because right here is where we hit a massive bottleneck, the 13.2 checkpoint. Pushing up to 13.2 is awesome, but if you want the stock to go beyond that, it requires a definitive, serious breakout. It's not just going to casually drift higher from there. It needs a real surge of buying pressure to smash through that ceiling. That 13.2 mark is basically the gatekeeper that triggers the true next phase of expansion.
Section 3. The long-term potential. Massive recovery phases.
Now, if and only if that major breakout past 13.2 actually happens, the next phase of the recovery kicks in. And guys, this is where the numbers get really massive. Once that ceiling is shattered, the analysis points to our first major long-term recovery target, 31.55. That is a staggering jump from our 6.14 floor. But again, it's so important to remember the logical flow here. Hitting 31.55 is entirely dependent on those earlier, smaller breakouts succeeding one by one, like a giant puzzle.
And this just brilliantly illustrates the ultimate extreme potential we're looking at. Let's just pause and let this visual delta sink in for a second. We've got our floor down around 6. We've got our midterm recovery target up at 31.55. But the analysis reveals that over a longer period of time, the stock can even stretch up to extreme highs of 100. As far as targets go, we're looking at the potential for some absolutely massive, game-changing moves.
Section 4. Navigating the risks. Looking at the long-term price chart.
Okay, seeing a target of 100 on a stock currently fighting to hold 6 is thrilling. But we've got to snap back to reality for a minute. The data clearly indicates that while these big moves are totally possible, they're going to unfold over a long period of time. This is a long-term outlook. It's definitely not an overnight lottery ticket. The crucial point here is summed up perfectly in this direct quote from the source material. You have to be very careful and cautious about these kind of price action and try not to go below the support and the stop loss. That is the foundational risk management strategy here, folks.
The upside is vast, but the rules are incredibly strict. You respect the 6.14 support, and you absolutely respect the 550 stop loss.
And that leaves us with the ultimate question as we wrap up today's explainer. We see the massive upside potential stretching all the way up to 100, but we also see that strict, unforgiving stop loss sitting at 550. So what do you think? Does AMWL have the sustained momentum to hold that floor, smash through the 13.2 bottleneck, and actually climb this ladder? The structure is absolutely in place, but ultimately, the market's going to decide. Keep your eyes on those key levels, and whatever you do, never ignore the floor.